The major European indices are trading up around 1.5% this morning. That's after Wall Street posted its best day since August 2015, amid softening concerns of a trade war between the US and China. With me now to discuss trade ideas for the day is Bryan Noble. He's the founder of TraderNoble.com. Bryan, thanks so much for joining us. So obviously last week we had a bit of a sell-off in the S&P and the other US indices. Monday we saw a bounce back. Where's your trade in the S&P from here?
Yeah, it's been incredible volatility. You know, on Friday evening it looked like we were going to crash. On Monday the S&P got down to 27.85, just below the 200-day moving average at 9 p.m. And then in the last 15 minutes of the futures trading, the market rallied 10 points, opened on Sunday night around the 2600 area, had a brief look at 25.90 again, back down to the 200-day moving average, and then in the last hour and a half last night just screamed up to close at 26.60 and then gapped higher again this morning as we wait for the US traders to come in. The 9-day moving average is coming in at 26.82, should offer small resistance, but the real level to watch is the 50-day moving average at 27.39 from where we broke down after the Fed meeting last Wednesday.
Do you see it moving up higher to that level?
Well, I certainly think, let's see how we get on to 26.82. Certainly you've got to respect the price action from yesterday. I think most traders like myself were hoping that the market would fall yesterday, get down to the 25.40, test the February lows, because the McLennan oscillator, which is the internal reading of the market, was extremely negative on Friday, but not oversold levels. It needed one more down day. The put-call ratio was the highest in 15 months. So we're all looking for this big move yesterday, but unfortunately the relations haven't thawed between the States and China helped the markets yesterday, and then the level of volatility is just it's great for trading, and if you're on the wrong side of it, it can be very expensive.
Now, switching on to euro-dollar, we've seen a bit of dollar strength over the past 24 hours amid risk-off sentiment. Do you think that this euro is a good chance to buy here?
Yeah, I think 123.50 is good support, and then 122.55, which is last week's low, is the real support on it. I'm still looking for a move back up to 127, 129. I think 130 is going to be very hard to break. I'm looking, I think to put on a more macro short position if we kind of get up to the 127, 128 area with a 130 stop. I don't think the ECB are going to be too happy with the euro going much higher from here. Obviously, in fairness to Trump, when he came in last year, he said he was going to weaken the dollar. The euro was trading at 105, and we've had a big move. So 20% move in the currency is probably enough for the moment.
So you think the greenback's bottomed out?
Well, I think if you look at the commitment, the traders, the speculators are at their largest short position in the dollar since 2011. Generally, they tend to be wrong at big turns. So I think we're near the level where the dollar is going to become a buy. But I would prefer to get the euro up to kind of 127, 128, or the dollar index maybe down to 86, 86 and a half for a move back up to 94, 95 again.
Now, switching focus to gold, we got a real vote of confidence for the precious metals from Goldman Sachs yesterday. It upgraded its outlook for the precious metal there. Fresnillo stock jumped 4.5% in yesterday's trade, but gold has been range trading. Which way do you think we're going next? Yeah,
it's incredible. The last 4 Decembers, both gold and silver have bottomed and had big moves. We got up to a high there, 1366, 1370, 6 or 7 weeks ago. We've range traders. We got back down to test at 1300. The 1290, 1300 area is the 200-day moving average. Very hard to get back, break that level. Against that, 1375 is huge resistance. I think if we can break and close over 1375, then we're going to hit the 1450, 1500. But unfortunately, it's been a very quiet sideways range for literally the last 3 months after we got the spike after the December low.
Now, the Dow's another index I know you've been watching closely. What's your trade on that one?
Yeah, the Dow has been incredible volatility. I mean, what's happening in an hour in the Dow was happening in a month last year. We all thought when Trump got in that we're going to have this tremendous volatility every day. Instead, the market just went up, stopped, in a stair-step fashion all year. That all got to a head in December in January, after we got the tax cuts were finally put through. The valuations are so high; they're still really, really high. It's not sustainable. But once he said he was going to impose the tariffs, suddenly then with everyone short the VIX at the end of January, then we had almost a 3,500 point fall in the Dow. We got down yesterday on Friday which is just under 23,500. Again, everyone was hoping that we might test this 23,300 low from early February. We didn't. Instead, we just, we opened up yesterday, came back down, got a low at 23,740, and then we're trading at nearly 24,400 today. So incredible move. I think you got to respect yesterday's price action. I think any move back down to 24,200 is a buy, with a kind of 23,850 stop. On the top side, I think it's going to be hard to break this 24,700 to 25,000. I would be a seller in that area. Unfortunately, you've got to give wide parameters now instead of, given the volatility when you see the Dow moving 700-800 points in a day. Incredible moves.
Incredible, yeah. And just before we go, I want to just quickly ask you about the FTSE, because it's really outperforming the wider European market so far this morning. But we got a bit of a lack of vote of confidence from fund managers yesterday. We had this Bank of America Merrill Lynch survey saying that the UK is where fund managers want to put their money least. I know you're not a fund manager, you're a trader, so what are the levels you're looking at on the FTSE at the moment?
Yeah, I actually like the FTSE. I think the weakness of sterling has been a big fill-up to FTSE since Brexit. Obviously, FTSE has really struggled over the last week on the renewed strength of sterling. When cable got back up to 142.5, 143 area, people were selling FTSE. Got extremely oversold. We were outside the bottom of the daily Bollinger Band. We were at the bottom of the Williams Index. We've had a nice 2% rally this morning. It's helped by the 1% fall in sterling, and I think as long as sterling doesn't regroup too much, I think the FTSE is still a buy on dips. The real level to watch on the June contract, and we've such a huge discrepancy between the June contract and the cash market. There's like 85 points, and they have to converge by the time the contract expires on the third Friday in June. 67.50 is a Fibonacci support. It's a 500-day moving average as well. So as long as the June contract can hold over at 67.50, which we tested yesterday and we tested on Friday, I think this FTSE is still a buy on dips.
That was Bryan Noble, founder of TraderNoble.com. Thanks so much for watching, and we'll see you soon.